I'm going to finish this run out here and hopefully not get attacked by a black bear, which reportedly have been seen in this area quite recently. I don't know about you guys, but I'm a big stress eater, and I cope with my stress and my anxiety by mindlessly just munching on food on the couch with something on the television late at night when I'm trying to decompress. And I'm trying to break that habit because recently I put on some extra weight. Not really feeling too great about that. So I'm out here on this beautiful trail at the moment. Gonna try and get some miles in, but I thought I would take a moment, talk to you guys about inflation. And I don't really sympathize with politicians all that much. The whole reason the markets and the economy are in this mess at the moment is because of politicians having an influence on interest rates and their misstep on calling inflation transitory a couple of years back. But I will say that Jerome Powell and the Federal Reserve are being taxed with something extremely challenging at the moment. And I do want to highlight some things here for you guys. Their main mission right now is to bring inflation back down to more healthy and sustainable levels. And they can do that by raising interest rates, but they also want to be careful not to propel the economy into a deep and dark recession. On the other side of the arena, we've got the federal government, who is creating more inflation by spending like there is no tomorrow. So there's this ridiculous and unnecessary tug of war between the Federal Reserve and the federal government. And it'd be kind of like me trying to run a marathon on this trail right now, but I'd have to do it with a 20-pound kettlebell tied to my ankle. Yeah, I'll eventually get to my goal and finish my job, but it's gonna take me a lot longer than it really should have, and it's gonna cause me a lot more pain and damage. So that's exactly what we're experiencing right now and what's playing out with the markets and the economy. And it's what will continue to play out for the foreseeable future. It really makes no sense, and I wish the federal government would just curb their spending. And the harsh reality is, if the government were a business, they've been bankrupt long ago. Now we've got the next scheduled consumer price index, or CPI reading, which is generally used as a measure of inflation. It's due out tomorrow, and it will show the year-over-year inflation rate for April. Now, the CPI reading for the prior month of March continued to show a downtrend to 5%. But the general consensus at the moment is that the April CPI report will remain flat at 5%. And in my opinion, if the April CPI release comes out flat, or even worse, is slightly higher than the March report, the market is going to react very poorly, and there will be a very red day for stocks tomorrow. And that would be because the markets, again, in my opinion, are currently being overly optimistic about inflation continuing to have an uninterrupted leg down back to healthy levels and back to the Fed's target rate of 2%. And the markets are also being overly optimistic that in response, the Fed will begin cutting interest rates before the end of this year. I think the markets are going to be in for a sobering reality that inflation is going to start getting much stickier at these levels, and that the Fed might not be able to pause hiking interest rates in June. Or if they do pause, they'll likely need to keep rates at this elevated level for quite some time. Like I said, Jerome Powell and the Fed continue to be committed to their mission of bringing inflation back down to its target rate closer to 2%. But let's not forget that the Fed has already made massive policy errors by keeping interest rates too low for far too long throughout the entire pandemic, and then because of that, needed to play catch up with hiking interest rates. And that led to the fastest rate hike cycle we've ever seen, and was the catalyst for the banking crisis that we are now seeing unfold. Take a look at Silicon Valley Bank, Signature Bank, Credit Suisse, First Republic, and who knows who might be the next domino to fall, as depositors are losing faith in the banking system and taking all of their money out of smaller banks and going to the big boys like Chase and Morgan Stanley. So the Fed knows their credibility is on the line, and they don't want to destroy their reputation any further by making another big policy error and potentially pausing interest rates too soon. The last thing they would want to do is pause rate hikes and then start hiking again. I think it'll be much smoother if they pause, they can reassess, and then can eventually start cutting back down to a healthier level. And if inflation remains elevated, they will hold their interest rates higher for longer than the markets are currently pricing in to allow the effects of their hikes to work their way through the economy. And if the consensus is wrong and inflation continues to cool in April below 5%, the markets are going to love to see that. And I think it's fair to say it will be a very green day tomorrow, as it will be a vote of confidence that the Fed is one step closer to finishing their job. I don't know. I really have a hard time believing we will see inflation ever get back down to the 2% range. I think for that to happen, the Fed would have to induce so much damage to the economy and American people that the more reasonable alternative would be to increase their inflation target up to maybe 3% or even 3.5%. That just seems like a decent solution to me given the circumstances we have right now. So what am I doing with all this information and speculation when it comes to my own money and how I'm investing in the markets? I guess this is probably a good time to remind you all that the markets are forward looking, and that just means that likely outcomes are already being priced into the market based on data currently available. There is nothing you or I know that the market does not, and I am not smarter than the market, and neither are you. The market also isn't rational, and you can't rationalize something that isn't rational. So if you're trying to trade these big market events when they come throughout the month, just know that you're taking on a lot of risk. And although you might get lucky from time to time, it's going to be very hard for you to be on the winning side of a trade consistently over a long period of time. I personally manage my own risk and emotions with my money, doing the same thing I always do as a relatively young investor with a long time horizon. I'm going to consistently dollar cost average into the markets, and I'm not going to panic sell if the market starts to slide. As I always do, if there's another big correction in store for us like we saw in 2022, later this year, I keep a very healthy amount of cash set aside, which I'm happy to do right now while my cash is earning around 4.5% in a Fidelity money market. And I'll deploy some of that cash into the markets while assets are discounted and continue to fall. I do like to stay informed of the economy and the markets, as should you if these topics interest you, but I've learned that these things really shouldn't influence our investment decisions or our emotions when it comes to our money, and they certainly shouldn't keep us up at night. And I think the best thing that each and every single one of you can do is create an investment plan based on your own individual risk tolerance and time horizons, and stick with it regardless of what's happening in the markets. There's always going to be fear mongering and sensationalization that happens from mainstream media or talking heads on CNBC like Jim Cramer. But all of that is really white noise that you can just tune out. All right, I think I'm going to end this video here before I start rambling. Let me know down in the comments, guys, if you think the April CPI report is going to start showing that inflation is cooling down, staying flat, or are we heating back up again and heading in the wrong direction? I'm going to finish this run out here and hopefully not get attacked by a black bear, which reportedly have been seen in this area quite recently. So going to be having my wits about me here. But take a moment to like this video and subscribe to the channel if you found this information helpful. Stay safe out there, and I'll catch you guys on the next one.